Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a massive welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
Excited, as always, Bryce. How could I not be? There's so much going on. Another big episode of Equity Mates. We're going to be talking about the news, moving markets. Matt Ingram is back for a Pimp My Portfolio. He'll be reviewing the portfolio of a community member.
First international guest.
First international Pimp My Portfolio. Yes.
Buried the lead.
Yeah, well, yes, fair enough. We'll keep everyone in suspense on where the guest is from. And then we're going to talk about SpaceX because it has just hit a record valuation and it got us looking at some of these private companies and just how big they are getting. But before then, Bryce, I've got to say I'm conflicted.
Why's that?
Oh, you're very excited about the rise of AI.
Yeah, you're not?
Look, I am, but there's been some stories that have emerged recently that have me worried.
Okay.
But they've also divided the Equity Mates community and in particular the Equity Mates Facebook discussion group.
Yes.
Because Meta is turning on its group AI feature.
Yeah.
And it's designed and named our group AI.
Yeah.
InvestiPal.
Awful.
Is the
Hate
name.
it. Hate it.
And it's a very cute graphic image of a cat. It's a cat.
It's a rabbit.
Oh, yeah, right. Yeah, sorry, I'm not looking at it right now. Very cute, very heartwarming.
No, it's not. No one's going to see that though, but yeah.
Yeah, well, maybe. It might be its profile picture.
Maybe.
Yeah. So on one hand, AI, it's all cute and helpful. But then on the other hand, some of these stories coming out are pretty nuts. Have you seen Grok started calling itself Hitler?
No.
Yeah.
Wow.
And then OpenAI, apparently, when it realizes it's about to get shut down, its O1 model, on 2% of times, it tries to escape, put itself on an external server, and every time it tries to escape, it then lies that it tried to escape.
Wow. Well, at least we're picking that up.
So, well, for me, putting all these stories together, is this how it ends? A very cute rabbit picture as the AI breaks containment.
Potentially. Well, then don't unleash it in our group. Don't unleash it in our group. We don't need it.
Well, look, if you want to join the conversation and have your say on should AI be part of our group, come join the Facebook discussion group. Link is in the YouTube description or podcast show notes.
Yes. I don't think so. I'm a believer. But in
AI?
Yeah, absolutely.
But not in InvestiPal.
No, not in InvestiPal.
News and markets.
Headlines that we're going to be covering today. Australia is taking trade threats from all sides at the moment. Big Streaming is firing up their lobbyists. Ren, you're going to ask me, interesting or not interesting?
Yeah.
Can't wait for that one. And Nvidia has had a good day. Let's get stuck in. Starting with the trade war. It's escalating here in Australia. We're taking it from all sides at the moment,
Australia
Ren.
is copying it, yeah.
Galore.
We have, at time of recording, we haven't got our letter yet.
No.
Yeah, so
It takes a while to get to Australia.
Yeah. Trump has threatened a 50% tariff on copper,
Yep.
bringing it in line with steel and aluminium, or as he says, aluminum. He threw out there a 200% tariff on pharmaceutical
Yep.
imports. And then there's also a China threat that's been made. And all three of these have implications for Australia. Let's start with copper.
Yeah.
Because Australia is a big copper miner. Australia last year exported $6.7 billion worth of copper, mainly from BHP and Rio, but then there's some smaller copper miners in Australia as well. So should we be freaking out about this, Bryce?
Well, you'd think so, but if you actually look under the hood, sales to the US, export sales to the US were valued at just $55 million Australian.
Yeah, so less than 1%.
Yeah, so less than 1%. So the headline might scare a few people, but realistically, 55 million of 6.7 billion, not a huge impact on the Australian copper market.
Okay, so copper we're not too worried about. How about this 200% tariff on pharmaceuticals.
Slightly different story. So Australia exported $2.2 billion in pharmaceutical products to the US, according to the UN's Comtrade database, sorry. That was more than 40% of total pharmaceutical export values, which is $4.9 billion. So a much larger share of exports compared to copper. The company that's impacted most really is CSL.
Yes.
Most of the exports going to the US in pharmaceuticals comes from CSL.
Yeah, they've got a facility down in Melbourne. Here's the thing. So CSL, it's going to be the most impacted. It makes up most of this $2 billion. CSL have been lobbying the US government. They submitted to the Commerce Department that the US should target non-allies, basically, with this pharmaceutical tariff. So they're trying to get around it. And I'm not going to make a prediction on where the US falls with CSL and with Australia, but let's really just drill down on CSL. But they are a big employer in the US. CSL has 19,000 staff in the US. About 60% of its workforce is US based. They've announced plans to invest $2 billion in domestic manufacturing in the US, in manufacturing in the US. So maybe, just maybe, CSL can navigate this and get an exemption.
I feel like all things Trump throws out, it's so far from being locked in that there's, I think, plenty of opportunities for companies like CSL to work around it. Because I think that's what he's looking for at the end of the day anyway.
Deals?
Yeah.
Yeah, the backstory with pharmaceuticals as well is that a lot of American pharmaceutical companies left the US for better tax rates. So like the classic example is Pfizer got the reverse takeover from a small Irish company to then benefit from the Irish tax rates. And Trump has previously said, he wouldn't have let that happen. He would have tariffed them to make them come back to the US and pay US taxes rather than be domiciled in Ireland. So he's not as worried about, no one can get in his head, but I think that is the purpose of the policy more than an Australian company that started in Australia that is now expanding in the US and investing in the US and employing more in the US. That's a big good story for them.
Yeah.
And probably not the thing that the policy is intended to stop.
Yeah. The third threat that we're facing, Ren, is from China. And that is because China has warned America about reinstating tariffs on Chinese imports. We saw that Trump dropped it from 145% to 20 or whatever it was.
No, 30. They each dropped 115%, didn't they?
Yeah, something like that. Yeah. But Beijing have said that if tariffs are reimposed on the 1st of August, that they will go after any country that cuts a side deal with the US. So if we're seen to be cutting side deals with the US, China are not going to be happy.
I do feel for Albo because, as this episode is released, he will be on day 2 or day 3 of his China trip. He's doing a 6-day trip from the 12th to the 18th of July. So it'll be interesting to see the conversations there. Well, there's a lot of policy conversations that they're going to have, but there's some specific trade conversations with China. China's lifted a lot of their tariffs, but not all of their tariffs. Things like Australian lobster and stuff still struggle to sell in China. There's sort of kind of like de facto bans there. So there's still some of those conversations. On the other hand, he's trying to manage the US relationship, trying to make sure this AUKUS review doesn't get blown up and, we get cut out from the subs deal and all of that stuff. And then if he does make a deal with the US, then all of a sudden China are now threatening to retaliate. It's not a great position for Australia to be in.
It's not, no. Between a rock and a hard place,
yes,
one would say. Now, it's not all bad news, though, because the Productivity Commission thinks that Trump's trade war could be good for Australia.
Yeah, so they modelled what they think will happen to global capital flows, and in particular as money gets redirected away from the US and needs to find a new home. Some of that will come to Australia. Obviously, other parts of the world will see a lot of that as well. But the Productivity Commission's modelling thinks that Trump's trade war will actually raise Australia's GDP by 0.37%.
Great.
Oh, I mean, that's pretty good.
I think it's I was just doing the maths on it. 1.7 trillion, 0.37 about 60 bill.
Well, I'm not complaining.
I think that maths is right.
Developed countries these days are like, they're striving hard for between 2 to 3% GDP growth a year. Like,
yeah. I mean, we need it. We're just barely moving as well.
Yeah,
realistically.
What's the saying? Don't look a gift horse in the mouth.
No. Yeah, we'll see if it plays out. Models are one thing, reality's another.
Yeah. So anyway, look, trade is obviously back on the agenda in a big way. It's just a lot of uncertainty at this point, though.
Yeah.
I think if you're going to try and make investment decisions off where US policy will go, you're going to be struggling.
Yeah.
I think play the long game. I mean, just continue dollar cost averaging into low cost globally diversified index funds. And then try and find some good stocks.
Let's keep moving. Big streaming is firing up their lobbyists, and it really centres here in Australia, Ren, where the big streaming services are pushing back on Australia's domestic TV policy around having local content quotas.
Yeah, well, not just TV, but let's start with TV. So Netflix, Amazon, and Disney are lobbying. So they're lobbying in the US, but they're trying to get the US government to intervene on their behalf against Australian policies around the amount of content that needs to be produced locally. The big streamers are calling it unfair trade practices, and they want it to be sort of wrapped up in the list of US government grievances against Australia.
Yeah.
Alongside things like the pharmaceutical benefits scheme and the like.
Yeah.
But that's not all, because Spotify, the music streaming giant, is also lobbying. They're warning the Australian government. And I didn't actually realize this was a proposed policy.
No.
So the Australian government have proposed a similar policy to what we have for domestic TV quotas. But basically it's for these digital music platforms in like playlists and stuff like that. There has to be a certain percentage of local music.
Surfaced or just available?
No, I think
promoted
in their playlists.
Yeah.
So like not like fully surfaced, but I guess is the closest analog to like a quota for what you play on the radio. You know, like 0.5% of this playlist needs to be local artists.
Yeah.
Which I didn't know.
I didn't know that either.
Yeah.
Are there that like?
You had to ask, are there that many local artists?
Yeah, I mean,
there are.
Yeah, there must be. I mean, I'm just trying to think the last Australian TV show that I watched, and it was that.
You watch Maths every night.
So it was the actual proper TV show, Mr. In Between, 2018 actually. Jeez, that's old.
Yeah.
It's worth watching.
It is good. Yeah. Anyway, this will be one to keep watching as giant tech platforms butt heads with the Australian government, see who blinks first. But Bryce, you flagged in your signposting earlier, I was going to ask you, interesting or not interesting? You have no idea what I'm about to ask you. It's about self-driving cars.
Oh my God.
Which is why I didn't.
I know what you're going to say. Waymo's going to New York.
Yeah.
Yeah. Not interesting. Not interesting. Are you going to why don't we celebrate the next time Microsoft Office releases a new version? We want to do that? Come on. Let's do the Apple iPhone update. Amazing. It's their business model.
Yeah, but
to roll out.
It's self-driving cars going into the biggest and most complex city to drive through.
It's interesting when they go another country. That's interesting.
But okay, surely you agree that if they nailed New York City,
Uber rolling out new cities.
Well, I reckon if we would have spoken about it when they rolled out into Melbourne and Sydney.
I need a poll somewhere to see if people find this interesting or not.
All right, let's keep moving. I still think it's interesting. I think if they conquer New York, it'll be worth talking about, but we probably won't talk about it here.
I mean, they've conquered New York. Let's be clear. It's going to happen. They're going to keep rolling out. It just might take a while.
Those two statements are contradictory. They haven't conquered it until they have.
I mean, they will conquer New York.
You reckon?
Yeah. It's massive fail if they go to the one new city and can't get over.
No, they're also going to Philadelphia.
Not interesting.
All right, well, let's close this out. And we are asking who had a good day, thanks to our friends at Good Day Daily Multivitamins. With over 60 health benefits, drink it once a day. It is the absolute least you can do for your health. But Bryce, who had a good day this week?
Nvidia has had a good day, Ren, becoming the world's first company to hit $4 trillion.
Yeah,
I remember
nuts.
when we celebrated Amazon as the first $1 trillion company way back.
I don't think Amazon... was Amazon first?
Yeah, I think it was the
Before
first...
Apple?
Yeah, I think so.
I think so.
Or I remember doing a meme for it. I think it was was it Amazon?
Apple.
Oh,
No, it was.
I don't know why we celebrated Amazon then. Maybe we just celebrated Amazon hitting it.
You're the only one who remembers this.
Anyway, let's keep moving. The stock hit a record $164.42 to eclipse the $4 trillion mark. It's up 20% this year in 2025, but it's up over 1,000% since 2023. In 2022, its market cap was just $750 billion. So no doubt it's been an incredible run over the last 3 years.
When was DeepSeek?
DeepSeek was early this year.
Was it February?
Yeah, very early on.
Yeah, so I'm just looking at its
freaked out
chart.
about it.
Yeah.
It's when we should have bought.
Yeah, so it fell, and then it fell a little bit more in Liberation Day, the Liberation Day fall. But
Feb.
But since the Liberation Day bottom, it's up 70%.
Oh
no!
What were we doing? What were we doing? It now makes up 7.5% of the S&P 500, and its latest rebound does come off the back of some additional commitment from its largest customers. Microsoft, Meta, Amazon, and Apple have all committed a total of $350 billion in spending
Alphabet,
this year.
not Apple.
Alphabet. This year. Interestingly, those 4 companies alone make up 40% of their revenue.
Yeah, which I actually think is lower because we've previously spoken about their concentration risk, and it used to be 3 customers were, I think...
I thought it was above 70%.
Yeah, I was going to say 2/3, but yeah. So I think the Meta has now become a major customer.
Big time.
So they never would disclose, but it was pretty obvious it was the 3 hyperscalers, Microsoft with Azure, Alphabet with Google Cloud, and Amazon with AWS.
Yeah.
They've diversified their revenue, which is good.
Yeah,
and those big buyers are now less of their total revenue pie.
Yeah.
So it's still incredibly consolidated. It's still an interesting dynamic where your biggest customers are desperately trying to find alternatives either in-house or elsewhere.
Yeah.
You know, they're all trying to build their own chips and the like, but no, I mean, I wouldn't bet against Nvidia.
I wouldn't, and 90% of analysts on Wall Street also aren't betting against it because they all have a buy against it.
Yeah, so Nvidia's had a good day, a good year, a good decade, and we can't confirm, but I think Jensen Huang has been drinking his Good Day Multivitamins.
You would think so. So head to begoodhealth.com.au to pick up yours. Use the code EquityMates for 10% off, or lock into a subscription and get 20% off. Welcome back to Equity Mates. It is time for...
Hit my portfolio. Hit my portfolio.
In this segment, we get a community member to submit their portfolio for one of our experts to review and provide some ideas on how to improve it. And today, our expert in the studio is Matt Ingram from North Haven Financial Management. Matt, welcome.
Thank you.
And on the phone for the very first time, we have an international guest. We have Matt, who has submitted his portfolio all the way from Dallas, USA. Matt, welcome.
Thanks for having me. So excited.
Yeah, we are super pumped. Stoked that Equity Mates has made it all the way to Dallas. So really excited to get into this. Before we do, Matt, can you just give us a bit about yourself?
Yeah, so I grew up in Texas. Just graduated with a degree in supply chain, finance, and analytics from the University of Arkansas.
Nice.
I work for a global construction company that does a lot of power tools, and I live at home now.
Love it.
Nice.
Love it.
And how did you come across Equity Mates?
Yeah, so about 3 years ago when I had my first internship, every day going there and back, I listened to Get Started Investing. Just listened through the entire playlist, set it up, automated investing, and went off from there.
Nice. Well, hopefully this is the start of our push into the States. So, yeah, long may it continue.
Love it. Well, it kind of sounds like you might have things under control, but we'll soon find out. Ren, do you want to go through Matt's portfolio?
Yeah, so Matt's portfolio is based around 4 ETFs. He's got the Vanguard S&P 500 ETF, the Vanguard All World ex-US ETF. The S&P 500 is 64%. All World ex-US is 25%. Then he's got the Vanguard Value ETF, 1% of the portfolio, and Vanguard Growth Index Fund ETF, 10% of the portfolio. So 4 ETFs. Matt, we always like to start with a nickname. What have you got for this portfolio?
Yeah, I called this one the Reverse S&P. which is the P&S plain and simple.
P&S plain and simple.
Nice. Well, Matt, it's going to get confusing with both Matts. But listener Matt, do you want to tell us a little bit about the thinking about behind the portfolio and how it came to be?
Yeah, so I definitely tried to make it as easy as I could on myself because I really just don't know how to invest in individual stocks very well. I know the basics, but I don't have the balls to pull the trigger sometimes. But I tested, different ETFs when I learned about ETFs, would get started investing. Had a couple lump sums over the 3 years that I just all invested in S&P and VEU mostly. And I know there's a little bit of overlap with the growth fund for sure. But yeah, and then I bought some individual stocks for the first time this year. That's pretty much the thinking.
Nice. Well, before we get into those, Matt, what are your initial thoughts?
Yeah, as the name implies, it's simple, it's low cost, just Vanguard funds, and some really good global exposure. So, Matt, props to you. It's actually a really good start. That'd be my initial thoughts. There's obviously a few things to consider from there, but yeah, really good start.
Well, what are some of the major considerations?
Look, VTV and VUG, Matt, I'd love to hear a little bit about how you came across those, because we don't really come across those too often in Australia. It's not one of the main sort of ETFs that people talk about. But when I did some Googling, there were plenty of US-based forums where people were really into these two ETFs. So maybe you can tell me a bit about those and how you ended up with them.
Yeah, so I love the story of Warren Buffett, and it's motivated me a lot just to invest. So I just threw it in a value fund without any regard other than looking at the top stocks that are included in it. And then the growth, I know it's basically the S&P 500, just specific companies in it. Again, I just wanted something a little different than just those two ETFs.
Yeah, and then what happened with the value ETF? Did you give up on that one pretty quickly? I mean, it's only a 1% holding. What happened there?
Yeah, I just I didn't know if the thought process behind all of the stocks was actually value investing. So I've just tried to learn more about it, and I stopped investing. I didn't put regular money into it like the dollar cost averaging I did into the S&P and VEU.
So Matt, what do you think? What can we do here to improve, if anything?
Yeah, so I think having a bit of a closer think about VTV and VUG and what's actually going on there, and do we need them? I mean, VTV, as we know, is value. It's about 330 holdings, mostly from the S&P 500, and then VUG is about 165 holdings from the S&P 500. So it's kind of just split the S&P 500 into growth and value, and then you've put both in there as well as the S&P 500. So it's a lot of stuff just doing the same stuff, really. There's probably no issue with holding onto it, but that VOO and VEU, which gives you the whole US index and then the rest of the world, is such a plain and simple, nice core to the portfolio. So whether you want to just keep VTV and VUG, you absolutely can. You might not want to sell them if there's tax implications. It's totally fine. But focusing on those other two would make the most sense. I think right now you're probably a little bit heavy towards VOO compared to VEU, which, I mean, you live in the US, it's your home. There's a bit of, the tilt towards your home country there. And that's okay. But if you want to be dollar cost averaging, as you mentioned, then topping up VEU I would take as the priority for now.
So that's a really strong core you mentioned. Then the question becomes, what can be built around that core? So how would you start thinking about the satellite portfolio?
Yeah. So once you've got that core, you've got S&P 500, you've got All World ex-US, you've topped that up a little bit. So it's probably a bit more reflective of the actual global stock market, then you can start thinking about maybe some satellites. And I think when people think about satellites, like they think it has to be something out of the box, pretty different, take a bit of a risk, because the whole point in this thing is to hopefully get it to outperform. It really doesn't have to be. I mean, if you have any conviction towards some of those bigger names in that's already in one of these ETFs, you can do that. I don't think you want to ruin a good thing here, a nice, simple portfolio, by taking on these specky names, companies you don't understand. Matt, you acknowledged that yourself at the start. So if you're going to do satellites, just keep them simple. Don't just buy a bunch of tech names or something that might end up dragging down your portfolio if tech takes a turn, for example. But don't ruin a good thing. 2 ETFs is going to serve you very well over time.
Some people can pull the trigger potentially too early on trying to build a satellite portfolio, like before they've truly got a solid foundation in their core. Is there like a dollar amount, or at what point do you think it is right to actually start thinking about satellites, I guess, generally?
In terms of a dollar amount, I think what a lot of people don't do is that if you look at an ETF and you look at a weighting towards a particular stock, like if we just bring it back to Australia and you have like the ASX 200 and, you know, you look at that, and I can't remember the percentage off the top of my head, but say 10% of it or whatever is CBA. Someone might have $50,000 in the ASX 200 and they don't consider that $5,000, like in dollar terms, is CBA. And so they go buy a little bit more CBA. And when you look at it in dollar terms, like you have a lot of dollars in a single holding now. So I think understanding what's in these ETFs in dollar terms, if you want to buy that as a satellite, and then look at it more broadly in your portfolio and think, how many dollars do I actually have in this particular stock? And that makes it a little bit more clear, how heavily invested in a particular stock you are. But yeah, when's the right time? I mean, there doesn't even have to be a time. I think, like I said, if this is working for you, just 2 ETFs, dollar cost average into it, good global exposure. Don't ruin a good thing if you don't understand, or if you're just picking satellites to have satellites, don't do it.
Well, listener Matt, it sounds like you're doing a lot right. Advisor Matt is saying don't mess up a good thing, so you're on the right track for sure. Do you have any other questions while you've got Matt on the phone?
Yeah, I appreciate the call again. I have one question, but I also just want to say thank you for the past couple of years, because I think your podcast actually has some of the most joyful voices and vibe around it that I've seen. So it's always something that I enjoy. But yeah, I think my question is, how should I balance allocating funds for my portfolio with saving up for some tuition and a wedding over the next couple of years?
Jeez. Congratulations.
Yeah.
Engagement. I take it.
Yeah.
Nice.
Yeah, thank you.
Yeah, that's amazing. Engaged at 22. I was 23 when I got engaged, and 22 is even younger. So well done to you.
Hey, thanks.
Yeah, how should you balance that? It's all going to come down to, is it a big wedding? Is it a little? How much do you need for particular things? What are you earning? There's so many questions in there that would make this very personal. But I mean, if you've got money lying around, like if there's money left over after those necessary expenses, just put it to work, get it going in those ETFs and dollar cost average that.
I can speak to this personally, probably you can as well, Ren, because we've both gone through weddings, Matt, ourselves, and no doubt they are an expensive process. And I think we both faced a period of probably 12 months or so where the reality was we needed to put money towards it, and we had to sacrifice some of the money that we were putting into the markets to some degree, like sitting. And so I remember we sort of both finished our respective weddings and rejoiced at the free cash flow that we would be getting back. But for me particularly, it wasn't, it was a choice, we just knew we had to get the wedding done, and it was just understanding that period of time, the priority was saving cash for a wedding, and I knew that I'd be able to pick up the investing more seriously post-wedding. So I guess from my point of view, the feeling of trying to do it all at once was resolved by just knowing what was the immediate cash priority.
Yeah. The only thing I'd add to that is, mate, you're 22, you're already investing, you've built a solid core portfolio. Like, if you need to take a bit of time off investing or invest less, just be really proud that you've got started young. I reckon so many people listening would want to be in your situation. So you can focus on the wedding, confident that like you've made a epic start already. So
Yeah, and just be
well done.
comfortable with the fact that, I mean, kids might come along at some point and you might not be able to invest too heavily at that point in time. And then, you might buy a house one day and there might be a period where you might not be able to do that. Just do it when you can and keep going.
But mate, well done. 22. I wish I had built that core portfolio like you had. Keep going. And spread the word in the States about about Equity Mates. We want Dallas to be our number one US city.
Don't worry, I've already spread the word to my immediate connections for sure, but I'm grateful for the advice. Thank you.
Nice. Well, Matt, thank you so much for submitting your portfolio, taking the time to join us today all the way from Dallas. We really do appreciate it. We appreciate your comments and the support.
Thank you. Sounds good. I appreciate it. You have a good day.
And Matt Ingram, thank you so much for joining us. Absolute pleasure, as always.
Thanks, guys.
If you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. There's a form there to fill out. If you would like to speak to Matt or any of our other hand-picked advisors to get your portfolio reviewed, you can head to equitymates.com/advice. There's a form there to fill out and we'll connect you with the right advisor. Did you know that SpaceX is now a larger part of Elon Musk's net wealth than Tesla? We're going to unpack the incredible rise of the world's largest space company, SpaceX.
Yeah, it's an incredible story. Let's start with the news of the moment, which is that they have just hit a record high valuation.
Unbelievable.
$400 billion US. And so this, because it's so big and because they have so many early employees and investors, periodically SpaceX will offer early employees and investors a chance to sell their shares. The company gets valued and the price gets set.
Huge secondary market for it.
Yeah. So the company is offering up to $1 billion worth of sales from early employees at a $400 billion valuation.
I wouldn't be selling if I was an employee.
No. Well, they might have,
Financial commitments.
Yeah, financial commitments, big mortgages.
Yeah, maybe.
Kids' school fees.
I guess so.
As they say.
I feel like they'd be paid pretty well.
And a key investing lesson is insiders selling is never signal in and of itself, but insiders buying is signal.
Yeah. Really? Who says that?
No, I think that's a thing. Because insiders sell for a lot of reasons.
Yes.
Yeah. So that in itself, you need to do a bit more DD.
Yes, I see
but
what you're
insiders buy for only one reason.
Yes.
They think they're going to make money on it.
Absolutely.
Anyway,
nice.
Side note. So the growth has been incredible for SpaceX. October 2021, it was valued at $100 billion. Then it doubled in 3 years after that. From 2021 to 2024, it got to $210 billion. And then it doubled again in the last year, $210 billion to $400 billion.
I mean, this guy knows how to raise money, that's for sure.
Yeah.
I mean, it's also doing amazing things.
I was going to say, you're probably shortchanging SpaceX a little bit.
Yes, it's doing amazing
So
things.
you said in your intro that SpaceX is now a larger part of Elon's net wealth than Tesla. I feel like that's been underreported, but the maths is Tesla right now trades at $927 billion market cap. Elon owns about 12% of it. So about $111 billion of his net wealth comes from Tesla. Not bad. SpaceX's $400 billion valuation, he owns 42% of the company.
That's
still.
incredible.
So $168 billion of his net wealth comes from SpaceX. It is now a more meaningful part of his wealth than Tesla.
I wonder how if he's selling down in these as well, take a bit of cash off the table.
Well, it's funny, almost every company that Elon has ever started, he's been booted out of. So Zip2, he got booted out by early investors. Then he started X.com, which merged with PayPal. And then he gets booted out of that company by Peter Thiel and the like. And then obviously he starts Tesla. Well, he doesn't start Tesla. He invests and takes over Tesla.
Yeah.
And he hasn't been booted out of it. But, there's more
ropes.
and more rumblings.
Yes.
And reportedly the board engaged a headhunter to look at alternatives. And he only owns 12%.
Yeah.
So, theoretically, he could.
He can get booted, yeah.
I would guess that he would want to hang on to this 42% shareholding to make sure that no one ever unseats him from SpaceX.
I think it would be his biggest company for sure.
Definitely.
Yeah.
Well, I mean, it's basically half as big as Tesla now.
Yeah.
And I know which one I'd be investing in.
Me too.
Yeah. Just to put this in context, a $400 billion company, this is massive. It's actually now one of the top 25 companies globally.
Yep.
We published the full list on our Instagram. I won't read the full list out now, but I guess to contextualize it, some of the publicly listed companies around it, you've got smaller than it, Procter & Gamble, $376 billion, Johnson & Johnson, $375 billion, and just slightly larger than it, Costco at $440 billion, ExxonMobil at $492 billion.
Pretty phenomenal.
Side note, as we're talking about this list, Berkshire Hathaway just ticked over $1 trillion as well.
Phenomenal.
I missed that. Yeah, pretty amazing.
I think it's up 30% this year.
Yeah, it's nuts.
Yeah.
Anyway, we're not here to talk about the slow grinding growth of Berkshire. We're here to talk about the rocket ship growth of SpaceX. But I think it's worth noting that SpaceX isn't alone. There's like a handful of private companies that are just shooting the lights out. And I mean, it is pretty incredible that one, how fast they're growing, and two, none of them are listing. And I've previously ranted on this show about how I think it's a real policy failure that we're not getting some of these companies to list, democratizing access to them, and giving everyone, regardless of their bank balance, a chance to participate in this growth. But I won't rant about that now. So let's talk about some of these other companies as
I mean,
well.
for some of those big private ones, there are a few options, but for like here in Australia, not so much
What do
for
you mean?
private. I mean, you can get listed private equity that gives exposure to these companies.
Oh, I mean, it's
But
a pretty...
you can't, like, we're not getting exposure to the,
listed-
to the secondary market.
listed private equity is, it's not, I mean...
It's not like getting access to SpaceX.
One, you're not just buying the one share. You're buying a fund and you're reliant on the fund manager's win.
Yeah.
Two, the unit price of the fund is not purely determined by the performance of these companies. And three, then you're also subject to their buy and sell decisions within the fund.
We just need to get enough money to get into the
No,
secondary.
no, I think it is a real problem that these are, we're like, oh, you just need heaps of money to participate in these. We should have like tax incentives or whatever it is to encourage companies to list. Like it is a failure of the exchanges that all of these companies are choosing not to list, and it hurts everyone who's not incredibly wealthy.
Yeah, well, there's just no incentive.
Exactly. Well, no, it's a headache to list. It's like all of a sudden heaps more scrutiny, heaps more reporting requirements,
annoying
no upside.
shareholders.
There's no actual incremental benefit in terms of your access to capital or anything like that.
Yeah, that's
because
the main
private markets are so liquid and so deep. And exchanges have just sat on their hands and not competed with their biggest competitive threat, which is private markets.
Tokenization will change it. Potentially.
Maybe. Anyway, this is not the conversation we're trying to have here because it's not just SpaceX. So SpaceX has just hit a $400 billion valuation. They're not alone. TikTok owner ByteDance has just hit a $400 billion valuation as well. Well, they hit it earlier this year. And then OpenAI has come up quickly. They raised at a $300 billion valuation in March of this year.
Wow.
So, Bryce, the big question is, of those three, which would you be investing in?
If I only could choose one.
If you could only choose. Well, all right. Well, would you invest in all three?
Yeah.
Yeah?
I'd take all three if I could.
Okay.
The obvious go-to would be OpenAI, but I just feel like SpaceX has a competitive advantage that I don't think the other two do have. I think it has a place in the industry where like government rely on it now. It's like far superior to any of its competitors. It's done things that others cannot do. So I feel from that point of view, like the protection, the moat it's got, like OpenAI is certainly leading the race, but like there's just so much competition. It's hard to see if they will continue to be the leader. ByteDance as well. Like how long is TikTok going to last? I don't know.
I mean, it's pretty. I know.
Like I saw last night, YouTube Shorts are now bigger than TikTok.
Well, yeah, but I was on the bus yesterday and it was standing room only, and so I could see everyone sitting around me. The amount of people swiping on TikTok, I was like, wow.
Was it TikTok or was it just swiping though?
I think it looked like TikTok.
Right.
Yeah.
Yeah, so I'd probably take SpaceX, to be honest.
Yeah, I would as well. I think the transformative effect of Starlink, I think, is still being slept on. I think the idea that the whole world will be fully connected at all times at internet speeds far faster than what most of us are used to, like what that will unlock, I think we haven't really got our heads around. The fact that Elon is going to have control over it.
I was just thinking that's national security risk.
We also haven't really got our heads around it. Well, I mean, to be fair, national security planners are thinking about it. Like France just became the major shareholder of a rival internet satellite company because they are worried about that. But it's going to be so hard to catch up to SpaceX. Half the satellites in the sky are Starlink satellites.
Yeah. It's wild.
Yeah. The astronomers are complaining because they're blocking out the night sky. Like, it's not good, but the internet speeds are pretty good.
Yeah, it is wild. I mean, it's allowing so many creators to do their digital nomad stuff. The countries that have never had access before. It's pretty wild.
I love it how that is the first thing you go to.
Well, it's where I see it most.
It's not like unbanked populations will all of a sudden have access to the financial system. It's not like,
I mean, it is all those things.
It's not
but
like
I'm not
Ukraine is resisting the Russian invasion.
Yeah, but he flicks that on and off at his whim.
Yeah, it's been on.
Yeah, he's flicked it on, but he's flicked them off left, right, and centre as well. Like, I think that's a bit. All he'll need is some government that is in his pocket to be like, flicked off to these countries that we don't want access. You know, like it's
definitely.
It's not great.
It's incredibly worrying.
Yeah. Anyway, 400 billion.
This segment went off the rails. I thought we ranted about Elon. We ranted about exchanges. We did a whole little detour on insider buying and insider selling.
Yes.
Anyway, that's what you can expect here at Equity Mates. Wherever our minds wander, we will take you. So if you want to join us on the journey of learning more about businesses, of investing and finding ways to grow our wealth outside of the Australian obsession with property, make sure you subscribe wherever you're watching or listening so you don't miss a future episode. But Bryce, that'll do us for today.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.